Hello everyone, my name is Phil, I'm with Pragmatic Trading, and this is the second and the last weekly analysis for this week. I'm glad to be here with you today. Today is the 14th of October, it's a beautiful Saturday, it's a sunny day here where I am, and I'm hoping you're enjoying this weekend as well as I am. So a lot of things had happened in the past few days. I've had a successful week. I could say a very successful week, but I'm trying my best to stay humble in these volatile environments. So we have a lot of things to talk about. So I will try to keep this concise and short. I will do my best to not waste your time and to share any valuable information that I have with you. So if you're ready, let's buckle up and let's jump into this second and last weekly analysis. So, just like every time, before we start talking about what is possible today in the next few days, I would like to do a quick recap of the things that had happened already in the past 5 days. So I have posted my weekly analysis on 10th of October, that's exactly 4 days ago, and I just want to play a little bit of it, a tiny portion of it, to show you what did I have to say, okay? So let's turn off the music for a moment, let's turn up the volume, and let's listen to what I had to say. Alright. My bias remains to the downside. Why? Well, we are at the bottom of this range. This asset isn't showing any signs of strength. It isn't showing. It is showing some kind of weakness. But since we have 1 hour, all right, that's it. So I clearly stated that my current bias at the time on 10th of October remains to the downside. Why? Well, we were rolling over and we were glued to this support here, this daily zone of support. I will explain this in detail, okay? Before we do that, let's turn down the volume. We don't need it so high anymore. Alrighty, let's play the music and let's continue with the analysis. So before I say what has happened in the past few days, I want to focus on what I said in my first weekly analysis. So if you watched my videos, my earlier analysis and videos, you would clearly remember that I have marked two zones of interest. Okay, I will use the rectangle that could tell me what will the bias be. Okay, I have marked this zone and this zone here. Well, why those two zones? I think it's pretty clear. These two zones were a resistance. This one and this one here, right? We broke above those two zones, and then naturally we should find some support at the same zones, right? Did that happen? Yes. Did it last for long? No. So, what's the deal here? That area of resistance was retested as support multiple times, okay? So yes, you could long that multiple times, you could take profits at the top if you were not greedy, etc. But what is my point? Why am I talking about this? Well, this is the context. When you know the context, it's fairly easy to know what could happen next. So this previous resistance became support, but after it became support, what's happening? Like, what is the strength of the bounce? Do we get new highs, or we just get the new lower highs with the rolling over of the asset? So you have to pay attention to what is the asset doing at certain zones and places. You have to identify what those zones are or what they could be, and when an asset gets to a certain zone, you have to identify what's happening, right? So yes, we did bounce 4, 5, 6, 10 times in the zone, but we haven't produced any significant movement to the upside. What have we done instead? Well, instead we have retested the weekly descending trend lines multiple times. We failed to close a single daily candle above the weekly descending trend line, and what has happened? Of course, we rolled over from the area of resistance, and then we broke down the very level that we used for support many times. So I don't like the theories behind a strong or weak support. I mean, yes, I do classify my support and resistance zones by their strength, potential strength. But I'm not a fan of the theories, well, if the support gets tested 3-4 times, it will break, blah blah blah. I mean, I don't care. I'm looking at the reaction off of a zone, right? So we already had reactions, and of course, if we were glued to this support, of course I will have a scenario where we break that support. Okay? I mean, that's completely natural. That's the textbook price movement. Okay? So I don't want to lose too much time talking about the same things that I've been talking about in the past 2 weeks. If you have time, I suggest you to watch my earlier videos, because I have been mentioning this 27.123 zone many times in the past 2 weeks, okay? I've mentioned that zone in every single analysis of mine. Instead, let's focus on the anchored volume profile of the current local range. What is interesting about it? Well, it is in the same zone. You see the value area high of this volume profile of this range here is in the same zone where our support and resistance was, right? Now, what is interesting about it? We haven't retested it, so we used it as support many times, and we haven't retested it yet, okay? So what I see in the next few days, we could retest it as early as tomorrow, maybe, I don't know, or the next week, the beginning of the next week. We could retest it, confirm it as resistance, and move lower towards the point of control of the range, right? That's what I see according to the volume profile of this range. Besides that volume profile, we have the bigger one of the whole range from here to the end, okay? Let me move this picture a little bit. I like my logo, so please don't mind my logo. What do we have here? Well, this is telling another story. Where are we? Where is Bitcoin currently? It is dancing around the point of control of the whole range, right? We have the value area high above the 28,000 highs, and we have the value area low in the bottom of this range, somewhere around 25.6. So we are dancing around the point of control. It is pointless to say we will go towards the value area high or towards the value area low, but one thing is for certain, we will move in either of the directions. How do I know that? Well, point of control cannot keep the price, an asset glued for so long, okay? Besides that, what else do we see? Okay, what else do we have? Well, we have a major fib retracement of the whole range, and we have a smaller one from this bottom to this top. What is interesting about these two pools? Well, you see that we have bounced from this green fib level here, which is very important. I always say these 3 fib levels are very important, and we have bounced from 50% of this major fib retracement. What is interesting about it? Well, these two zones, this one here, the wicked zone, and this zone here, are producing some kind of a move. Considering today is weekend, I wouldn't expect much, okay? But I am just showing you what did I see and what do I see now. Righty? So what is interesting about this too? Well, we broke down this major level, fib level, the white line, which is at the same place as this fib level here, okay? Yes, I know these fib retracements are used to look for the downwards targets, but they could show you a good potential zone for a bearish retest, right? And no wonder that is this good old 27.2, 27.3 and 4 zone. So I'm gonna turn all of these now, and I'm gonna show you one more thing, okay? A few days ago I've put these trend lines on my charts. Why? Well, on my charts, well, we have the daily trend line and the 4-hour trend line. This is the only support ascending trend line in this range that we've been for a while. And if this asset decides to break 27.2 and 3 and maybe deviate above, I would be looking at this reaction here. The strength of this reaction will tell me a lot. It will be telling, and it might tell me, will we retest the weekly trend line once again if we are going to consolidate before shooting higher, or are we going to keep going down or just rolling over after the weekend. So that's it for the Coinbase chart. This is the daily chart, so anything I say here can take a few days up to a few weeks to play out. Okay, please have that in mind. Now, I would really like to show you what my trades and actions were in the past 3 days, because in my humble and honest opinion, I think that I nailed the market in the past few days. So let's go from the PPI. Okay, what did I say here? While my first weekly analysis is being uploaded, to be honest, this is not looking good. If we lose this rectangle 38.2 of the range and this value area high, we will continue the violent downwards move. 1 hour bullish divergence is the only thing holding it currently. And shorts are printing, of course. Everything is printing. So I have seen the sign of weakness, and I have warned people that this zone might not hold after so many retests. Okay, let's take a look at the second video. So now what did I have here? Give me a second. Okay, I'll show this one here. So when we had a breakdown of the range support, I said, now we're going to short the value area low retest and the first fib level above. That's a structural retest too. Why structural? Well, this was support, and now it can and maybe will become resistance. It did become resistance. So we had the value area low 27.32. We had this fib level 27.32, and we had a structural retest, like a bearish retest. This is why I have posted this short setup before the PPI. Okay, as you will see in my video, and as you could see in the first video of mine, I've said that when you trade in news and volatile environments, the timing does not matter. The zones are what matters the most. Why? Because sometimes you will get the entry before the news, sometimes you'll get the entry during the news, and sometimes you will get the entry after the news. So entry, your limit order or your market order, whatever, is what matters the most. When that happens, before, during, or after the news, it doesn't matter. Okay? So let's see if this aged well. Oh, look at this. What did I say? I record the first part of the video, blah blah blah, I go through the details, why I had this short entry, yeah, I've just shown you here. Reaction is obvious, be pragmatic. So at the time of making this post, we have already had the PPI, if I'm not wrong. Let me check that. Give me a second. No, that happened before the PPI, 3 hours before the PPI, and PPI was here in this candle. So you see, in this occasion, I have got my entry before the news, like 3 hours before the news. So don't wait for the news. Establish your targets. Find the zones that you are interested in and trade those zones. Do not care about the news or fundamentals. They are just a fuel. They will not tell you where the zone is. So the reaction was obvious. I was very confident in my short, and that's why I kept it open during the news and after the news. I wasn't scared out because I have a lot of experience, and I don't care if I get stopped out. What happened next? Well, a few hours later, my full take profit zone was reached. I've exited my short because I don't want to be greedy. It's already a really big, nice profit, so I don't care where an asset will go next. Okay? Here I made a little joke, and then experts tell you not to trade and use fundamentals. Well, if you know your levels and if you're confident in your analysis, you shouldn't care what anyone says. So I'm saying again, keep learning, keep practicing, improving and upgrading your strategy. Reward is just around the corner. Let me see, I have a few more tweets. Alrighty, I've shown you this one. Let me see, what do I have here? Okay, now things are getting interesting. Before we analyze this picture, let's jump to the charts. Okay, let's go back to the 1 hour chart. Let's turn off this major range anchored volume profile and let's see what had happened. So I have entered my short here. Let me take the horizontal array right here in this area here. I have exited my short 26.740 here. Okay, so that was a nice move. I have exited my move. My bias has changed. Why? Well, of course, if you are in a short, the place where your bias might change is the take profit zone, right? At least a partial one. So what did I have to say here? Changing my local bias here. Since Bitcoin is retracing down to the lower parts of this local range, I am interested in a long. There's a 4 hour exaggerated or regular bullish divergence, so it might play out. Okay? Now what is interesting here about the price action? Well, we did have an automatic reaction upwards, but then we started rolling over. And at that point in time, I told myself, okay, Phil, there's a possibility we form the 4 hour regular bullish divergence. This asset is rolling over. You already have some fib pulls. You have the confluence here. You see the fib web. Fibs at exactly the same place. And I said to myself, okay, this is good enough for me, this is worth taking a risk, and I have taken that risk. So I have opened 2 longs. One was opened on Bybit, the other one was opened on MaxC, a new exchange. So why am I doing that? Well, I told you, if you want to be hedged, you need to trade on different exchanges. So this is not a financial advice. You should do your own research, you do your own diligence, and try to find the exchanges that suit you the most. So I have had this 26.6 and 26.57 zone, and I have posted this long setup, right? So at almost exactly the same place where I exited my short, I have entered a long, right? What did I say? It can wick lower, yes, but it shouldn't, I'm sorry for my mistake, go much lower here, and there's a good possibility we form a 4 hour bullish divergence in the next few hours, right? If it gets invalidated, continuation down, but I think the dip will slow down here. And what happened last night, if I'm not wrong? Yeah, 11:32 p.m. I have exited my longs, 27.09, 27.09. You see? Fat profit, perfectly executed trade, a lot of patience. And what's funny about it? What is funny about it? I have tried to scalp hedge this zone of rejection. So, guys, my name is Phil. I guess you know that. But the name of my trading community, of the thing that I'm making, is pragmatic trading for a reason, okay? Being pragmatic is something very valuable, okay? It's not a liability, it is an asset that you have on the markets. Why am I forcing this word pragmatic so much? Well, if I enter the short here, the place where my take profit is, I might try a long. I did long this week here. Okay, where was my take profit? My take profit was 27.09. Did I exit my long here? Yes. So my current bias at the time, my bias was okay. We will reject here, but we can easily go higher to make another high before making a deeper retrace. So what did I do? Okay, I have exited both of my longs here, but I have opened 2 more shorts at the very same place, a little bit above. Why? Well, normally if my bias changes there I might take a different position which goes into another direction, right? And that's exactly what I did. and luckily enough I was rewarded in less than an hour later. Okay, I have shorted that area. Okay, it wasn't the very top, but I have waited for a retrace. Doesn't matter, another 80 and 70% profits. So I have had 4 successful trades in less than 48 hours. You could see the percentages, everything is transparent, and I have explained everything in detail. Now, before we slowly start wrapping up this video, I have many more things to say, so I am doing my best to be as concise as possible, as short as possible, but I can't go faster than this if I want to focus on everything I want to focus. So why did I exit my short here? My long here, okay? So I have entered my long around this zone and I have exited here. Okay, why did I do that? Well, let's take a look at some of the major and other fib retracements. For that, I would need to go back to the 4-hour chart and show you what am I analyzing, okay? So, we have the major fib retracement. When I say major, I mean the whole range, from the very top to the very bottom, the relative bottom, right? We have the middle fib retracement from this next lower high to this relative bottom. We have the minor fib retracement from this top to this bottom, and we have the most recent one from this top to this bottom. Now, what is interesting about these things, okay? We don't find any confluence near the top of the wick. The only thing we have here, which is very interesting, is the most recent fib retracement, okay? You can clearly see the golden pocket and 2 of the fibs above, right? Very, very important, and we have reacted off this fib here. But of course, that wasn't the only thing that I had, okay? That's not the only thing that I had. I had more pulls in the area, and some of them are scalp pulls. I'm not sure if I can do it on the 4-hour chart, but I will try my best, okay? If not, I can reduce the time frame to something lower. Yeah, let's go to the 1-hour chart and let's take a look. So, what do I see when I visualize this range? I see 2 waves. This is wave 1. I can measure, using the tools properly, I can measure the potential of this wave. And besides that one, I also have this wave here. Is that right? 1, 2, 3 upwards. Okay, so let's do that. Why not? Let's take the tool that we use. Okay, let's put it here. Nothing of too much significance, and let's put this one here. Now things are getting interesting. If we measure the potential of this wave, upwards wave, we see that this fib level, which is also called take profit fib level, is at the same place where this important fib level is. Unfortunately, I can't talk about my fib levels here, but if you want to know what my fib levels are, feel free to join my group. We discuss together. We improve our knowledge daily, weekly and monthly, and we help each other. The point of community is to stay together, to help each other, not to compete, but to work together to achieve a goal. So to me, this was more than enough of a confluence, okay, to exit my long. Now, what is interesting about it? Well, why did I exit my long if I thought the price and asset will keep going up, especially if we have the lower highs in a price action, lower lows, I'm sorry, and the higher lows in the RSI. What is that? That is a regular bullish divergence. What is this time frame? It is the 4-hour chart. We haven't had these for a while, so this could be a very powerful engine to push the price higher than this zone. Why did I exit my longs? Well, I have acquired more than 180% of profit from in 2 different positions. Okay, both of them were 800% each. And of course, market will always present you with new opportunities, right? And that is exactly what I have done, okay? I have posted this 28 minutes ago. Last night, at the place of exiting my shorts, I have entered 2 more longs, okay? So to me, that is a perfect execution. Why do I say perfect? Well, I can't do better than this. So to me, this is perfect. Why? Look at this. Simple as that. Enter short, exit short. Okay? Enter a long, exit the long. Enter a short, exit the short, enter another long. Okay? So I don't have a crystal ball. I'm just trading what I see. I can and I will be wrong, but that doesn't matter to me. Okay? What matters is that I will follow my plan, I will execute my ideas, and I will always stick to my plans. So now I have clearly shown you what is my current exposure to the market, okay? I currently have 2 longs open. I have closed all of my short positions, but I do have short limit orders above these wicks. What kind of limit orders do I have? Well, we can talk about that, okay? Let's go back to the 4-hour chart. Let's slowly wrap up this video. It's already taking too long, but guys, a lot of things had happened, and if you are truly interested in the market, you will stay with me until the end of the video, because things are getting heated. Things are getting interesting. So let's turn on all of these major fib retracements. Major fib retracement, the middle one, the minor one, the most recent one, and we have the scalp pull of the range. I forgot to show you that besides the take profit fib and besides this important fib, we had the scalp pull a little bit below, so that's already enough of a confluence for a trade. Now, I wanted to roll a cigarette, but I can do that later, right? Remove the bad habits from your life and try to establish the healthy ones. Besides all of these things, we can take a look at the anchored volume profile of this whole range. When I say this whole range, I mean this range here, from this candle up to the right. Okay, that is a range. What is interesting about it? Well, the value area low, this white line here of of the whole range hasn't been retested as a resistance. In it, we already have one fib level from a middle fib pool. We have the second fib level, the third fib level, the fourth, the golden one, the important one, fib level, etc., plus the value area low, plus this was a support which could be confirmed as a resistance. Yes, of course we can deviate and go down. Yes, of course we can break it, confirm it as support, and keep going higher. But who cares? When you're hedged, you shouldn't care at all, right? So I will use the rectangles. You guys know that I like them, and I will mark this zone as a zone of relevance. Why? Well, this zone could produce a really nice rejection. Whether that will be a scalp short or whether you will try to swing short there, it's not of my concern. Your trading is your responsibility. I'm just showing you what I see. I will short this area. I don't know yet where I'll take profits, whether I will take profits partially, etc., because I do have the 4-hour bullish divergence, which can be very, very powerful, okay? Without it, I would say in advance that this short here is a swing short for taking these lows, but I cannot say that yet. So we have that zone there. What else do we have? Let's take a good look above. This is interesting. We have this important golden pocket level here, along with the major fib pool 38.2. So 27.3, if you ask me, is also a very, very strong area, very important area, which could produce a rejection. So in my books, it is a zone that is worth a risk. Okay, Now let's switch back between the log and non-log chart. Let me see if that's interesting. Well, we do see some confluence here a little bit below, so I will make this rectangle a bit wider, something like this. Okay, now I wouldn't like to talk about these higher targets yet, 27.4, 27.5, even though I have a really nice confluence here, and I will put another rectangle in the zone. Okay, it is around the point of control of the whole range. You see this orange line here. Okay, so I assume some of these zones here could produce a very strong rejection downwards. Will that create a new low here? We don't know. Okay, it doesn't matter, but it is a tradable zone, so I will be carefully observing and looking at this zone here if we reach it at the beginning of next week. I do believe we will, especially because of the 4-hour bullish divergence. If I am wrong, that's fine. I have already taken a lot of profit in the past 2 days, so I truly don't care. I am prepared for every scenario. I will talk about the lower scenario at the end of this video, but for now let's stay focused on these ones. So all of these zones, starting from 27.2 up to 27.5, let's say, are the zones of relevance. Why? Well, all of those zones were a support. If we confirm them as resistance, if we create a bearish divergence in the area, yes, we can and we will go lower. I will not talk about higher targets. Why? Well, I need some confirmations for that. Okay? What is that? Well, it's very simple. If we reclaim 27.2, 27.3 and 4 as support in the next few days, during the next week, there is a good chance we will go higher towards the 27.5, 6, etc., and then we will talk about it. But for now, it's useless to talk about it. I am not one of those Twitter guys that will say Bitcoin to 100k until the end of the year, let's go, sell your house, sell your kidneys, etc. Nah, I'll never be that guy. I'll never be that guy. I'll never be the moon boy. I'll never be the doom boy. I'll always be pragmatic, and I truly don't care about those people and their lost followers. So, I have given you my upwards bias, my targets above. I do believe this 4-hour bullish divergence will play out. It is weekend, so I don't expect much from Saturday today or Sunday tomorrow. We will go sideways in the range most probably. But I do expect this bullish divergence to play out. Where and how, I don't know, but I do have the targets above. I will short those targets. I will exit my longs if we get to those targets, if I don't get stop lost before, because weekend is a weekend. It's a tricky little thing. And I have the upwards targets. Now, I would like to focus on the targets below. Okay, locally, I could have some targets below for another long, but I will not be trading this range anymore. Why? Because I have taken a lot of profit in it. Okay, I don't want to be greedy, and I still don't have a clear confluence below. But what should I have? Well, I should have targets below, right? For that, I will use my good old Coinbase chart. It is a macro chart, and I will be focusing on macro levels. Okay, the good old pitchfork. Welcome back, buddy. We haven't seen each other in a while, right? So, in one of my first videos, I have talked about this being a rejection, rolling over, and I have mentioned this golden pocket, these 3 fibs inside of this pitchfork, as a very good place for a strong reaction. So we can see that we have already had one reaction here, right? It was very strong. We went from 24.9 to 28.5.6, right? So usually when an asset reaches the same level again, it will produce another strong reaction. But what will that reaction be? That's what matters the most, okay? So if we do have a strong reaction, but not so strong as the previous one, And if we stay glued to this level, most likely we will break it in a violent manner and move towards the bottom of the pitchfork, which is around 24.6, 24.5, 3, etc. But trading is not easy, right? And TradingView and other things that we use haven't made it easy for us, so we have to check the non-log chart, right? I'm sorry, this is the log chart, this was the non-log chart. So what is interesting about it? Well, we haven't even touched the golden pocket, these fib levels, according to the log chart. If we do, I do expect a very strong reaction. Sometimes, I repeat, sometimes, an asset will come here, make a little bounce and then break it in a very violent manner. So, if I have talked about my bullish targets for the range, I will talk about my mid-term bearish targets for this range. Okay, so I'll use this price label. This is all approximate, so these are not certain targets, but let's say that we somehow break down from this level here. The lowest I see us going is 22 point something, 23k. Let's put it from here to here. Okay, so the bottom of the pitchfork is naturally, as well as the top of the pitchfork and as well as the median line, are naturally a place where a strong move occurs. Okay, what will that move be? No one knows. No one can tell you. I cannot tell you. No one can tell you. If there's anyone who tells you this will happen, they are blatantly wrong and they are gambling. Okay, so bottom of the pitchfork is usually a good place where a deviation happens, an accumulation and a very violent move upwards. Okay, that's one of the scenarios. So if we go down there, I will be trying my best to long the area, okay, to see if that will play out. Okay, and the second scenario, the second scenario is that we come to the bottom, we retest it as resistance, we confirm it as resistance, and then the violent move continues down. But why should I talk about 19k, 18k, etc.? Okay, there is no need to do that. There's no need for me to talk about the targets at 38, 40k. I mean, I'm just a pragmatic trader. The Twitter is full. Just open the Twitter, go to crypto Twitter, look at these clowns, etc. For example, this guy, I don't want to call him out. I don't know who he is, what is he doing, but I can see that he is posting some random targets like 45k, 42k, 100k, Cathy Wood, Bitcoin to 1 million, etc. Those are games for the clowns. If you are a clown, follow those people and forget about studying. Just keep buying, keep selling, do whatever you want, and pray that the day when you lose everything will not come, because the prayer is everything you'll have. The knowledge is not something you'll have if you follow those people. So I've shown you my targets below. I do expect us to reach the 26.2k level. Why? Because I have different fib pools there. Let's open the regular one. Alrighty, what is that? Where the traditional pool shows the 26.2k is the golden pocket, the second place of interest. Why is that? Well, it is the golden pocket, right? The Fibonacci number. A little bit below we have this one. And if we go back to the non-log chart, what will we see? Well, this is very interesting. Golden pocket of this big pitchfork is the same place as the golden pocket of this whole range. So I do expect a very strong reaction. If a bounce is strong, I will be longing. If we have a breakdown, well guys, I will be honest with you, if we don't produce a strong bounce here, the things will get really nasty, in a sense that we can easily reach 24, 23k or lower. Okay, you have the targets, you have my bias. My current local bias stays to the upside. Why? We have the 4-hour regular bullish divergence. I do expect us to reach 27.23 or 4k. When that happens, I will be carefully observing what could happen, because this zone will decide, in my opinion. This zone will decide the price action or price movement in the next 2 or 3 weeks, right? We do have some fundamentals next week, but I will talk about them in my next video. Let me check if I have something else. Oh, I did have this short position. It was also closed. It's on another exchange that I don't have open here. So I'm not bragging about my positions. Sometimes I will post the numbers. Okay, sometimes I will tell you when I close the trade, sometimes I won't have time, and I will not promote any exchanges so far. Maybe I will in the future, I don't know. So what else did we have? We have this local pitchfork. What's interesting about it? Well, look at the top of the pitchfork. We are retesting it as a resistance. We have another local one which goes higher, if I'm not wrong. Yep. According to this pitchfork, we could easily, let me turn off this macro one so we can focus more. According to this one, what do you see here when you see this pitchfork? Well, I see this golden pocket as a resistance, then I see it as support. Did we break down in this candle? Yes. Can we retest it as a resistance before moving towards the median line, 26.1 and 2? Another confluence? Yes, we can, and maybe yes, we should. So if that happens, that will be in the zone of 27.3 and 27.2, and that's one of the biggest reasons why I will short that area. I already see a lot of confluence in this zone, so my long, if it holds, if it gets stopped out, okay, but if it holds, I will take profits from my long there and I will enter a short. I might be wrong, maybe we go higher towards the top of the pitchfork again, towards the weekly descending trend line, 27.7, yes, but for that to happen I need to see the reclaim of these levels so we can move higher. Let me take another quick look. Temporary bounce zone, so yeah, we did bounce from one of them, we deviated below it, and we have the current zones of interest. We are below both of those zones. This is exactly why I told you these zones are important, because they were the previous resistance of this whole range. If we hold them with conviction, we will go higher. We didn't do that. We retested the next resistance, we failed to close the daily candles, we rolled over, and that's why we are below all of these areas. It is weekend, that's why these daily candles look very weak. I do believe this 4-hour divergence plays out, so I can exit my longs. If that doesn't happen, I don't care, okay? I secured a lot of profit in the past 2 days, okay? This 4-hour bearish divergence could be invalidated. If that happens, I know that this asset will most likely take these lows and go lower. Why? Well, if the 4-hour bullish divergence couldn't hold it, if it couldn't validate itself, of course we can easily go lower. For now, for the end of the video, my bias remains to the upside locally, but I am not expecting much because we have a very strong resistance in this whole area from 27.2 to 27.4. Okay, so my local bias stays bullish as long as this 4-hour bullish divergence is present. I do expect us to retest the value area low, or maybe the point of control of the whole range, and then head back lower again towards the golden pocket of the whole range. That's it, guys. I haven't published my PPI CPI video. In it I go through the details why I have taken this short, and I have talked more about how you can and how you should trade the news and the fundamentals. I have a few key takeaways, key points in which I focus on what are the things you should and should not do during the PPI and CPI. I will most likely publish that video tomorrow, but for now I'm leaving you with the second and last weekly analysis for this week. I have been pretty clear, and I think I've showed you what do I expect for the next 4 or 5 days. Once again, thank you very much for listening to me. Thank you for taking your precious time to watch my videos, to have a glimpse, to know what is my insight, and thank you once again for everyone out there who supports my work. Once again, if you want to stay updated, If you want to stay up to date or updated, feel free to follow me on Twitter. My username is PragmaTrader and my name is Pragmatic Trading. As well, you can support me on my channel, right? My name is Pragmatic Trading. I have a few videos. I have only just started, so I do expect your comments, likes, and subscribes. If you like my content, if you like what I'm showing you, feel free to like the video and share it with someone that finds some value in it. Okay? What can I say? It's Saturday. Go and enjoy the weekend. I hope you had a successful week. I hope you're having a nice weekend. And once again, as always, your favorite trader and analyst, Pragmatic Trading, loves you much. I'll see you next week, guys. Bye bye.